As the stock market continues to consolidate, we're going to look at one of the leaders for the beginning of this year, the financial sector. Hi, this is Mark Arbeter with S&P's Chart Room. Taking a look at a one-year chart on a daily basis of the financials, you can see clear movement of higher highs and higher lows. Since November, we've been in this fairly tight upward sloping channel. Recently got very overbought like the overall stock market did. We moved up just above the top of this channel, at the same time getting very overbought. So what we were looking for here was some price consolidation, both in price and time, and so far that's exactly what we're seeing. Sometimes during these pullbacks, you'll come right back to the 50-day simple moving average like you did here and like you did here. That would equate to just a little more drop, and possibly that'll happen in time and not in price. It's also possible you could see a drop down to the lower channel. But what the financials has been doing, like a lot of the other sectors and major indices, is that it's putting in either a flag or a pennant. It looks like from the top here, these two parallel sloping lines here, that would be a flag. It's just a series of lower lows and lower highs within a very narrow band. But since over the last week or two, we've had a higher low, so it's also possible that within that pennant that we're putting in, or within that downward sloping flag, we're actually tracing out a pennant within that downward sloping flag. Either one of those, a pennant or a flag, is a continuation pattern of the prior trend, which was of course higher. What we need to confirm that it is a flag or a pennant would be a breakout above this top sloping line off the recent highs. Once that broke out, then the flag and pennant would be confirmed, and then we would expect higher highs for this move. There's a couple other things on the daily chart that we like. As we mentioned, the financials have been a leader during this year, and even if we go back to the summer of last year, you can see this is just a relative performance of the financials versus the S&P 500 in a clear uptrend, higher highs and higher lows. The other thing we like here on the daily chart, this is just the 14-day relative strength index. Each time the financials move above 70, we have seen a pullback in both price and time. But the last couple of pullbacks, you never got oversold with respect to this intermediate term measure of momentum or price performance. You've fallen back into this 40-50 area, which is a sign of strength. You've also seen this with a lot of the other sectors as well as some of the major indices. So you get overbought, you never really cycle back into oversold territory. In our view, that's a sign of strength. And it suggests that the next move here for the financials will be higher. There's a couple other things we like about the financials, and this is from a longer term perspective. During 2010 up until the latter part of 2012, we were in this very large bullish base. We had this breakout here late 2012, early 2013. The size of this base equates to a measure move up to 23, so that's decent upside from here. We think it could go, even higher than that over the next year or two. The other thing we like is that during the meltdown here from the peak in 07 down to the bottom in 2009, prices fell fairly rapidly. That suggests that there was little supply, overhead supply built up, little buying done as prices were cascaded lower into the 2009 low. That will allow, I think, for the XLF to move higher a little more fluidly from here. The real resistance here, if you want to look for a chart resistance zone, comes in from back in here from the late 90s, early 2000s. We don't think this is an issue here because it's at least 10 years old. If it had been, over the last year or two, it would have, implications here as it would represent good overhead supply. But because it was so long ago, we think it has much less relevance as far as creating a ceiling for the financials. This has been Mark Arbeter with S&P's Chart Room.